Good afternoon, everyone. This is Marvin Smith. I'm Marvin Smith, the CEO and founder of Smith Bookkeeping Financial Services. I am a tax accountant. And I just wanted to come on brief for like 10 or 15 minutes to discuss this upcoming tax season. And why I said tax season preparation tips for 2004. And the reason why I mention that is because many people, this is tax season, and during tax season, this is uncomfortable for a lot of people. A lot of people are anticipating return refunds because a lot of people have spent a lot of money throughout the year, and because of Christmas, they're behind on their bills, uh, or they're trying to pay off a car note, car loan, or they're trying to catch up on their mortgage, they're trying to catch up on their rent. However, many people, many Americans are struggling right now financially. So what they'll do is they'll go to H&R Block and take out a loan, a refund advance loan, which I don't advise. You take out a loan towards your refund. Why? Because you have to pay. Let's say, for example, you don't get the refund, or you're paying interest on your own money. So, me being a tax accountant, an accountant who's been in the field for over 20 years, many people walk inside my office, and the reason why I talk about tax preparation, and there's two, really several ways. One of them is many of you will try to do it yourself to save money. Now, what I would say to that is if you don't have the education or the experience and understand how taxes work, it all depends on how you file and I don't advise that. So let me give you an example. There are four categories when it comes to taxing, or I call it four categories when it comes to income, making money. The first one are W 2 employees. These are people that have a job. You have a job, right? So at the end of the year, you're going to get a W 2. So you can use that document to file tax on your tax return. So these are people that have job. They only have a job. The second one they'll call self-employment. Those who are individuals, sole proprietors, and are single member LLCs. These are the people that earn revenue or income by providing a service or sell of products or merchandise or consulting. So let me give you an example of a sole proprietor or individual. You can serve in a role as being a consultant. You're providing consulting services, and a company chooses to pay you as an independent contractor, meaning that you will give them in return what they call a W 9. A W 9 is the opposite of a W 4. You fill out a W 4 when a job hires you, so you can have taxes withheld out of your paycheck on the federal, state, and the local level. When you're an independent contractor, the company that's bringing you on board is they're not choosing to hire you as an employee, they're choosing for you to provide a service to them. So when you're providing service to a company, you will now give them a W 9. That W 9 is going to let them know, are they going to issue you a 1099 NEC? What does NEC stand for? It's an acronym for non employee compensation, which means that as an employee, when you work for a company and you work, let's say, 40 hours a week, and you're being paid every 2 weeks, and your gross income or gross income based on the hours that you work is $2,000. Now, your gross is $2,000. Before you get your paycheck, there's two elements. There's called pre-tax dollars. What is pre-tax dollars? A lot of you participate in a 401k, IRA, which stands for individual retirement account. And a lot of you participate in a health savings account. Now, when you get a health savings account, is because your job is providing you health insurance, but it has a high deductible. So with the way they offset that to give them a tax break and give you a tax break, which is tax-free income money going into your health savings account as a single, as a single person or family, or so you have tax-free income going into your health savings account and tax-free expenses on qualified medical expenses. So this is a contribution that your job make on behalf of the company into that health savings account to offset the high deductible insurance that you have. So now that's called pre-tax dollars. So if you make 2,000 and you're taking out $100 a month for 401k, so now it's going to be to the 2,000. You're going to take the 2,000 minus the 100. Now it's $1,900. And if they have a contribution of HSA of $50, now it's 1850. Now there's something now you're gonna be taxed on the 1850. So that you can understand that. And I'll keep it at the IRA, the 401. When you get your W-2, box one show your wages, right? Box three is all your social security, which is all your gross income for the year. And box number five is the Medicare, right? So box number three is going. If you made 30,000, right? Box one, which is going to be your gross income, but that box is going to show a smaller amount than box three. Box one is for the pre-tax deductions before you actually being taxed. So if you made 30,000 and you held back 2,000, box one is going to say 28,000. Box three is going to say 30,000. Box five is going to say 30,000, and box number 16 on the state is going to show 30,000 because there's no pre-tax dollars advantage when it comes to the state, only on the federal. So now you're being taxed on 1850, which is your deductions to federal, state, Social Security tax, Medicare tax, SUI tax, state unemployment insurance. You'll see that in box number 14. And any other post-tax deductions like employee sponsored health plans or life insurance, you're going to see that on box number 12 on your W-2. So you as the individual that's an employee of a company, depend on your filing status. There's single, married filing joint, married filing single, head of household, and the last one is qualified spouse, uh, qualified spouse with qualifying dependents, right? Head of household means head of household qualifying dependents. So those are the four main filing status. So those four main filing status is a deduction, what they call a standard deduction, and you'll see that. So that helps reduce your taxable income. So now that's a W two employee. So as a W two employee, the problem with a lot of people is one, I've had clients come in my office and they don't fill out the W 4 correctly, the exemptions. So a lot of you, based on where you at in your life, many Americans are living paycheck to paycheck. So what happens is you want to bring home more take home pay. So on your exemptions, instead of putting zero, which means they're going to take out more taxes, what's going to happen is you're going to claim yourself, or you might claim yourself into the pen. Now you have three. So now you're going to come home with more take home pay. What is take home pay called? Net pay. That's after all the deductions. So a lot of you say, well, I make $40,000 a year. Yes, you make 40,000. You signed up to make 40,000, but you don't bring home 40,000. I'll say it one more time. You have a job and your annual gross salary is 50,000, but you don't bring home 50,000. What you bring home is called net pay or net earnings. What does that mean? That is after all the deductions are coming out of your check. As I mentioned, pre-tax dollars, 401k, health savings account, flexible spending accounts. Then after that, a lot of you might have a Roth IRA that's post-tax, right? You might have employee. A lot of you have a employee sponsor health plans where your job take out. There's a 80-20. The job pay 80% and you're responsible for 20%. That 20% coming off the total that's being deducted out of your paycheck for having health insurance. Some jobs don't cover dependents. And if they do cover dependents, it's a reversal. I'll talk about that later. Um then all the taxes and all the deductions, garnishments, whether it's child support or garnishment could be if you have a levy or lien, for example, taxes, where now New York State or Pennsylvania, for Pennsylvania it's called Department of Revenue. For New York it's called Department of Finance and Taxation. They'll send a letter to who? Human Resource or the Payroll Department, letting them know that they are garnishing your wages. Why? Because you owe state taxes and you have not worked out a payment plan or you have not corresponded with them. So every 2 weeks or however you pay, they are they are told to withhold this amount from your paycheck. So that's net earnings or net pay is what you bring home after all your deductions and pre-tax and all your deductions from your paycheck. Um, so now, as I mentioned, I've had clients who did not fill out the W-4 correctly, meaning that what they claim themselves and their children to bring home more take-home pay. The other part is many of you might decide to move to another state. I had a client who was living in New York and moved to Florida. However, she did not contact Human Resource Department telling them a change of address. Now, that affected her. Why? Because in Florida, you don't pay a state tax. But in New York, you have to pay state taxes. So now she ain't up owing. And the reason why also too is anybody that's working at a job, many companies are now outsourcing their human resource, which means there is no more physical human resource department. So now this stuff is being outsourced to another company, and they are the ones now managing the human resources. Why? It's actually saving a lot of these companies money, and that's why now, when I was coming along 30 years ago, and you work, you had also got your voided check. If you got direct deposit, it would say voided, and then under that you would have your pay stub, and you were manually getting your pay stubs. So every week or every 2 weeks, based on how you pay, you was able to look at your pay stub. Nowadays, with not having human resource physically at your job, this is not the big companies. This is like the small companies. They're trying to cut back and save. So now every employee now have what they call an employee portal, which means you download the app to your phone and you're able to access your pay stubs and get all your tax statements like your W-2. So that's a very important component. 'Cause if you are not withholding correctly, and the other part is a lot of you have two jobs. You're not putting a second job on there, and the IRS will send you a letter saying that you need to correct your withholdings. You might be withholding less. If you're withholding less, now what's going to happen is you're going to have penalties and underpayment. Underpayment means that what you didn't take out enough withholding, you didn't take out enough taxes out of your check. Along with that, the IRS is going to penalize you. A lot of you are being penalized for what? A lack of knowledge. Because as I mentioned before, in many videos that I've made, growing up as children, our parents advised us, they didn't teach us. And they did not teach you didn't talk about taxes or credit at the dinner table. You didn't talk about it in church. You didn't talk about it in public, middle, and high school, or even college if you didn't major in accounting. So many you as an adult, you're walking around You're destroyed for the lack of knowledge, and a lot of you are not pursuing knowledge. A lot of you are getting upset, getting into your feelings. I can understand circumstances happen, but how long are you going to continue to be a victim and blame others? So the next step, I talked about self-employment. So if you're working as an independent contractor, you're getting gross pay. So let's say, for example, every 2 weeks as an independent contractor, this company is going to pay you $2,000 every 2 weeks, right? That is $4,000 monthly times 12. That comes out to $48,000. This contract is stated to pay out $48,000 to you. Now, in the contract, either the company's going to tell you you're responsible for your own taxes. A lot of you don't know that. So a lot of you will take the 48,000, but you're not paying any taxes to the federal or the state or the local level because as an employee, that's being done for you. But when you're an independent contractor, you're now responsible for making your own tax payments. The other part is the advantage of a contractor and the disadvantage is when you're working at a job, you can file for unemployment. As a contractor, you can file for unemployment. But here is that you don't know as an independent contractor, you can take your personal expenses, such as your cell phone. If you are driving to these locations, you have mileage, you have gas, and you have tolls. If you have a lunch, you have that's called meals. If you have an office inside your home, that's called the home office deduction you can take. Inside your home office, you have to have a what? A laptop or desktop. So that's computer equipment. Then you have to have a printer so you can actually print out documents or print, scan, or fax documents. And then you have to have supplies such as paper and pens in order for you to do the job. So these expenses are important for you to be able to do the job. So when you're a contractor, you get to take personal expenses, as I mentioned, cell phone or your car, and you're able to offset your income. So I mentioned that you have, so that's as a contractor for sole proprietor, individual, and a single member LLC, right? Or sole owner of an LLC, which means one person owns the LLC. The third one is corporations. Now, if your business is set up as a C corporation, then you're required to pay on the federal level. The corporate rate is 21%, and then there's a state corporate tax, depending on what state you're in. So here in Pennsylvania, it's 6%, 21% on the federal level, 6% on the state level, and a C corporation files its own tax return, which is due April 15th. And if you're an employee of your C corporation, your corporation is going to give you, you put yourself on payroll, you're going to give yourself a W 2. You're going to take this W 2 and file it on your personal return, 1040 personal return. Then, if you're an S corporation, the S corporation files its tax return on March 15th. And for those of you out there who are forming an S corporation, all these entities, as an S corporation, you must put yourself on payroll. So now you have an S corporation that's due on March 15th. So you're going to file your taxes on March 15th, and from the S corporation, it's not subject to taxes like the partnership. It's called a pass through. It passes through the business onto the shareholder or shareholders, which have ownership into the corporation. You get what you call a K1. A K1 is like equivalent to a W 2. It's going to show the shareholders' income and expenses. That's the only difference. You take this K1, you're going to file it on your federal and state tax return, which is your personal return. And your personal return is due April 15th. And the fourth one is investors. If you're into real estate, if you're a real estate investor, if you're into brokers for stocks and bonds, if so you're an investor, you get what they call passive income. What is passive income? Passive income comes from uh, collecting rent from properties or royalties. That's considered passive income. That's a different tax rate. So a lot of you go around here, you say, oh, and my sister, she had text me yesterday morning. To, oh, she showed me a video from Instagram about this idea. Someone made a video about taxes. And I said to her in the morning, I said to her yesterday, I said that video doesn't apply to me and you. Why? Because we own a business. So this is what I want to talk about: the lack of education and knowledge. You as an employee do not get the benefit the same as a person that owns a business. So you can understand that when you work as an employee, you are taxed now, and you're taxed now, and you take home. So it's taxed now, and then whatever left you take home. Take home. When you own a business, whether you're self-employed, have a corporation or a partnership, and you get passive income, as I mentioned, as an investor, what happens is we get the luxury of offsetting our expenses. So we could take more. So in other words, if we earn 100,000, I'm being basic, 100,000 from our business, but the years we get to offset that 100,000 with expenses. So here I pay office rent. I have equipment like printers. I pay office rent. I have contractors. I have an employee, and I have to pay myself as an employee of my own corporation. And I have many other expenses that I can take as my company being taxed as an S corp. I get to take when I drive here. I get the mileage, and I get the mileage. I get the repairs, the car wash. Here's another treat: if I finance the vehicle, I get to write off a certain percentage of that as an expense to the business. I have gas cards that's in the business. My cell phone is 100% in my business, both of them. Um, if I travel out of state and 4 hours without 4 hours out of the day, and I meet, let's say I met up with someone and we're talking business, guess what? I can write that off. If I travel to a conference, the airfare, the networking event, the meals, and everything that's associated with that event, that's a 100% tax write off. Okay. If I have my family work for me, I can pay them two ways. As a contractor, that's an expense to me, that's a write off. Or as employees, that's a write off. But as a W-2 employee, you don't get what they call, you don't get to itemize your deductions. The only way you get to itemize your deduction, like here in Pennsylvania, if you're an employee, it's called unreimbursable expenses. So if you're an attorney or you have a job where you're working from home and you have out of pocket expenses that they haven't reimbursed you back, you get to write those expenses off on the state side. So when you have a business, you understand based on the IRS tax laws and tax codes, which allows me to write it off. If I go buy a building and I'm into real estate, or I go buy a house and I rent this house out and I'm collecting rental income from my property and I replace the roof, that's called a improvement, which is called depreciation. So I can depreciate the house, not the land, because land never loses value. I appreciate the house that's on the land, the house. If it's a Airbnb, I can depreciate it up to 39 years if I'm using it as an Airbnb. If I'm doing it as a rental property, which is a single family, multifamily rental property, I can depreciate that for 27 and a half years. So depreciation means I can recapture that cost. So if I pay, for example, if I replace the roof, I got two parts of depreciation. I'm depreciating the value of the house, and in 5 years, I can depreciate the roof for 5 years, the cost. If I have an HVAC system, air conditioning, ventilation, and heating, and if I replace it, guess what? I can depreciate that, right? Some is 5 years depreciation. 7, if I paint my office and reconstruct it, let's say I have a home in my reconstructor, I can depreciate the paint. Now, if I repair, if something is broken and I repair it and not replace it, that's an expense. And I can write that off as expenses and still depreciate the building, the house. So what I'm saying here is that what? There's a misconception and miseducated by masses of our people, of the public about taxes. And many people walk around, oh, the rich people don't pay taxes. Yes, they do. They do pay taxes. How I know that? Let's say I think Jeff Bezos, he owns Amazon. And by the way, for you out there, go buy Amazon stock. Learn to have ownership in where you shop at. So Jeff Bezos has a warehouse, right? He owns Amazon, but he has a warehouse with his workers. Those workers are employees. Guess what? Guess what he has to pay every 2 weeks? It's called payroll tax. And every quarter he has to file a payroll tax return. If he's buying goods and selling, he has to pay what? Sales tax, right? And every quarter he has to file a sales tax return. Now, April 15th, when it comes time to him to do his taxes, and the corporation files a tax return, he's filing a tax return. Then from that, he's an employee of the corporation. Guess what he's doing? He has to file a W 2 on his personal tax return. So trying to kill that notion where you say, well, rich people don't pay taxes. No, they do pay taxes. But there's four levels. People that are rich are not an employee and they're not self employed. They're either going to be incorporated as a business or they're going to be what? Having passive income. They're investors. Either into real estate, but they're investors. So that's the misconception. And that's why it's very important that each and every one of you, a lot of you try to do your own tax return because you want to save money. So here's my question to each and every one of you. Why are you doing your own tax return when you have no knowledge or education about taxes? And a lot of you are sitting at the dinner table having a conversation with people. If you own a business or you're an investor or you're self-employed, your conversation and your taxes are filed different from a person who only has a job. And a lot of you try to make yourself connect with that person based on how they feel and not reality. I'll say it again. When my sister sent me a text yesterday from an Instagram posting of a lady telling me, "Oh, your tax return gonna be go up this month." And I said to her, "Well, that doesn't apply to me because I pay little taxes." What does that mean? Knowing the IRS laws and tax codes tells me what I can write off. When I do my tax return, you can bring home you made 100,000, but you don't bring home 100,000, right? You don't get to write off what I can write off. I own a business, and I said I did make over 100,000, right? Guess what? I can spend that money all throughout the year, but yet maintain, offset it. And then here's the good part: once I put myself on payroll, right? That's expenses, and then there's something called shareholder distribution, which is tax-free money. Think about it. So a lot of you need to educate yourself. A lot of you end up owing because you're not filling out your W-4 correctly. Um, a lot of you who are on Social Security retirement, not um, Social Security disability, those are on Social Security retirement. which get a 1099 SA, which means Social Security Administration, and a lot of you getting what they call your pension, or from a IRA, or from your school, or from annuities. You gotta get what they call a 1099-R, which stands for retirement distribution. And a lot of you don't know that that's another subject. But those come in my office, they end up owing on taxes because, as I mentioned before, when people say that I want to do my own taxes and I want to save money, if you notice the last couple of years, the refunds have become smaller, right? So as an employee, what can you really deduct out except for if you own a home, you get to take the mortgage interest, which is an adjustment to your income. But other than that, you don't have any other itemized deductions. And it's something called the SALT tax, which stands for state and local tax. The max on that is $10,000 on the state level. A lot of you out there, you might you might own your own personal home without renting it out. But if you just own it and you're living off of that, and you're getting a and you're working a job, you really don't have you cannot depreciate your personal home. But if you rent out a house, rent a house out, and there's rules to that. We'll go into later. But if you rent a rental property out, and it's to a tenant, not family, there's a lot of rules to that, and I'll talk about that. But you have rental property, what is use it as to rent it out and lease it out for 12 months to tenants, or using it as an Airbnb. And let me give you some info on an Airbnb. If you rent out an Airbnb 14 days or less, or you go stay at the Airbnb 14 days or more, you cannot write that is not income, and you cannot write off the expenses. Again, that also goes for a VROB. Again, which is a vacation property that you're renting out. If you rent out an Airbnb, those who are into Airbnbs, if you rent it out 14 days or less, which is out the year, or you decide to go to wherever your Airbnb and stay there for 14 days or more throughout the year, that income that is not income, and you cannot write off the expenses. So if you're into Airbnb and you're renting it out 365 days, then that's that income is income that you have to report, and you can offset the expenses off of that. All right, and there's two schedules: Schedule E for rental property and Schedule C. Schedule C is you running the Airbnb as a business by providing linen, and cleaning services. And you're going up there doing repairs. That's you running it as a business, so you're gonna pay self-employment taxes. If you're not doing that, you can write off on the Schedule E, and you're not subject to self-employment tax. But we'll talk about that also later on. So I'm gonna be off here. I just wanted to come on. For those who out there looking to do your own taxes through TurboTax, go to H&R Block or Jackson Hewitt. I'm not saying you can't do it, but if you have no education, which means no education when it comes to taxes, or you shouldn't be doing it. And do not go to any preparer that's going to somehow get you back $10,000, $20,000 by doing illegal things, by having you claim children from Puerto Rico and Dominican Republic. Do not deal with a tax preparer who is doing things illegal because you want back a large refund. Because eventually it's going to catch up to you. Why? Technology, AI. So do things the right way. Educate yourself. If you're owing every year, you need to stop and ask yourself a question: why am I owing every year? What is going on? Bring it to a tax professional like myself so we can sit down and talk about it. Maybe you're not. Maybe you fill out your W-4 wrong. A lot of people don't know how to fill out the W-4 because it changed around 2020. and some people don't know how to fill it out. So let's sit down and talk about it. I'd rather pay a couple of dollars and get I'd rather pay a consultation fee, knowing that I can bring clarity and give you understanding of why. Instead of you walking around crying all the time, playing the victim, talking about, oh, because I'm black, has nothing to do with that. It's a lack of knowledge. And where there's a lack of knowledge, the people are destroyed. You are destructive unto your own self. There is no excuse. And Mark Twain made a comment, a statement. What is it between a man that know how to read and a man that don't know how to read? They both void of understanding. Think about it. So now tax preparation is here. Make sure that you have all your documents. A lot of you try to be slick. You will have three W-2s and say, oh, go to the prepare. And if that prepare, do what you say and know that it's wrong. You cannot blame the preparer. I gotta blame you. And then I can blame the preparer. The preparer, the tax preparer is supposed to have your best interest and guide you the right way, not the wrong way. I don't care how much money you pay in him. Me as a man, as a tax preparer, I stand on my principle. Because at the end of the day, guess what? If I do something wrong or commit the felony, my EFIN number gets provoked by the IRS. So anyone out there who aspire to be a tax preparer and you're filing for your EFIN, electronic filing identification number, your EFIN, which is a 6-digit number, to e-file tax return, it asks you, are you a felon? So if you're out here committing fraud, why would you risk everything you got just to make a dollar? I make money, but I try to make sure I do it the right way. Okay, so what I'm saying here is that each and every one of you, you're gonna try to do your tax return on Karma, Credit Karma, whatever, all these apps, Cash apps. Why would you do your return on Cash app? Cash app has no customer service. A lot of you don't even know that. So pay the money. Life, life is a classroom. We all must pay tuition. And when you're lacking knowledge, everything in life has a cost to it. And a lot of you want the least path of resistance. A lot of you looking for a big return. You'll do anything for this big return. You're allowing your tax return to get a big refund and come back a year later, the IRS will come and send you a letter saying that, oh, based on this return, we had to adjust it. A lot of your returns are being held up also because of why? Of identity theft. Now the IRS sends you a letter saying we need you to verify this return, your name, your social security number. Why? Because a lot of your social security numbers are being compromised through identity theft. That's another. And a lot of you try to cheat the system. You work 3 jobs, you might try to report 2 W-2s. The IRS sends you a letter saying we're going to adjust your return because you didn't report that third W-2. You know how they know that? Because every job that you work for at the end of the year, they have to submit two things: a W-2 and a W-3. The W-2 goes to the IRS. The W-3 goes to the Social Security Administration. How many times has that happened to you where you know someone who tried to they had 3 W-2s, went to a tax preparer and didn't tell the tax preparer, or they did tell the tax preparer, they filed that tax return showing those two returns, and then what'll happen is instead of getting a refund, their refund, they instead of getting a refund, they get a letter in the mail 6 weeks later saying that what we have adjusted your return, which means what the IRS has what they call a matching system that comes from every company has to submit a W-2 by January 31st of this year and a W-3. How you think you get Social Security? Because the job, not only you, Social Security money is deducted from your check. The company has to report the your Social Security on a W-3 at the end of the year to the Social Security Administration, and the W-2s have to go to the IRS. So I want to give you that tip. So do not try to defraud the government or try to outsmart the government. because guess what? You're not going to win. So as I mentioned, I got to get back to work. It's tax season. Um, if you want to book a consultation, if you want to talk to me, if you want to reach out to me, you can inbox me on Facebook. Um, you can also email me at info@sbfsllc.com. Again, info@sbfsllc.com. If you want advice, for example, if you're going to buy a property, or if you're going, if you're selling your house, I'm gonna give you a tip. If you're selling your house and you get proceeds and you will issue a 1099-S. 1099-S represent the proceeds of a sale of a property. That means you sold a house for 300,000, you got back 100,000, and you have a job. Now, no one told you when you got back the money from selling the house that you were supposed to do what? Pay estimated quarterly tax payments, federal, state, and local. Why? What is estimated quarterly tax payments? It means anything that does not require withholdings. That means from your job. That's why your jobs do what they call a withholdings. Anything that does not require withholdings. So if you get proceeds, money from the sale of your home, and you have a job, but yet you didn't take out X amount of dollars to have that tax on the federal and the state level, look at the 1099-S. It has the federal tax on the state. And you decided to take all that money. Yeah, I got $100,000. Now the company, the abstract company, is going to do what? Or the bank, or the private, or the seller is going to report that sale of your house to guess who? The IRS. And then when you sold the house and you got the proceeds back from it, they got to issue you a 1099-S. Now, guess what? If you lived in that house less than 5 years, there's something called capital gains tax. If you live in that house 5 years or more, for single, it's $250,000 exclusion. You get married filing joint is 500,000. You won't pay taxes on it, right? But if you just flat out and you sold a second home, which you had a second property, and you got a 1099-S proceeds from that, and you don't decide to deduct and pay federal, state tax, local taxes out of that, and estimated taxes, guess what happened? That $100,000 get added on what? Your gross income from your job. So if you made 100,000 from your job and your filing status is single with no dependents, and you got proceeds from a house, it got a 1099-S, guess what's gonna happen? You're gonna end up owing. But you decided to do what? Do it yourself because you didn't want to spend the money. If you got winnings from gambling, Atlantic City, and you won money at the jackpot, and you won the jackpot, the casino gonna issue you what they call a W-2G. G stand for gambling, not Fred G. Sanford. I was just making a joke. So you're gonna get what they call a W-2G. Now, when you win, let's say you say, you know what? I don't want to. I want the whole winnings. I want 100,000. I don't want that tax. Guess what? You're gonna get the W-2G. Look at the choices: federal tax withheld and state taxes. You didn't pay no taxes on it, and then you have a job. What do you think gonna happen? You want 100,000? Add the 100,000 on top of your gross income, and what you think is gonna happen? You're going to owe when you should have had that winnings tax. Remember, you have to break the government off. You got to pay the government. You got to pay taxes. That's why Donald Trump is opposing. He want to put no taxes on tips and no taxes on Social Security. Wouldn't that be great for those who are retired, who live in a who could barely make it? Wouldn't that be nice? So I will be coming out more videos as we go along these next couple of days of tax season. Um, and as I mentioned, there are four types of income that's received: employment, self-employment, business, and investors. And each one has a different tax bracket. If you're an employee, the highest tax, we live in a progressive country, it goes from 0 to 37% as an employee. The more money you make, the more taxes you pay based on those brackets from 0 to 37%. Self-employment is you pay self-employment tax on any profits. You pay self-employment tax. If you're a single member or a partnership, you are going to pay self-employment taxes. If you're a sole proprietor, you're going to pay self-employment taxes. That is 15.3%. 12% of that is for Social Security. The 2.9% is for medical. And if you're a partnership and you're taking money out the partnership, it's called guaranteed payments. You have to add that back in. Plus, if the partnership, if you're paying health premiums, the health premiums get added back in as guaranteed payments. So you're paying self-employment tax on the. You're going to pay self-employment tax on your personal because you're going to get a K1 with guaranteed payments, and those guaranteed payments got to be reported on your personal tax return. So that's why it's important. And those that own property, real estate, that's a great thing to do. A lot of you don't know what to do in that also. There's a lot of advantages to it. Don't get into real estate investing because you saw a TV commercial and you said, well, God is talking to you. God ain't talking to you. What did he sound like? That's you. A lot of you are chasing the wind. You don't have any education knowledge. Take your time before you invest in things. All right, so I have to continue to work. Those who want a tax consultation, please reach out to me. There's nothing wrong with uh, paying, right? Everything in life, there's nothing in life free. A lot of you gotta get out of that mindset of, oh, how much is gonna cost me? And a lot of people like my people, you come in my office and you say, well, I'm not good at math. That's an excuse. Oh, I don't want to owe nobody, but yet outside my office in the parking lot, you are financing a car. Oh, I don't want to owe nobody. A lot of you, don't you got to pay rent or don't you have a mortgage? Listen to how that sounds. Oh, do I really need that? Well, then you don't need health insurance, right? I want you to think, because nowadays there's so much stuff on the news that many of our people are thinking with their emotions that led into the path of destruction. And I'll talk about that. A lot of our people don't know business. They really don't. They don't understand that what there's a cost to do business. You have to know how to write up a contract. You have to know how to negotiate. If someone say, they make an offer to you, why do you not counter offer? How many of you out there know how to read a contract or write a contract? How many of you out there have a lawyer? I have a lawyer for business and personal. How many of you out there have that? And when you are starting a business up, you have to have access to capital, money. That means your personal credit is going to open you up to either a loan or credit cards because you need money to fund the business. And I also talk about credit. I teach about credit, but I don't fix credit. There's a difference. I give you the education on how credit is, how it works, but I don't fix it. I don't make promises. Oh, you can remove this from your credit report. I guarantee if you send this letter, this template letter. No, that doesn't work. That's a YouTube scheme. And a lot of a lot of people get caught up into a couple of things. You easily scam into making a real estate investment. You easily scam into when it comes to health and relationships. You got to get the education and the knowledge, and stop let someone trick you. So, oh, we as black people, we have to learn to sit together, or we're institutional racism. You got to stop with that type of thing, because that's how you can easily be scammed. Because now you lean on your emotions. Just because that person look like you doesn't mean they have your best interests. You got to get out of that mindset and stop blaming others why you don't have. The reason why you don't have because it's because of you. You haven't put the work in. A lot of people want the path of least resistance, but as I mentioned, I'm not gonna go on. It's important that you get the knowledge. I say Sunday, February 2nd. Enjoy the rest of your day and look forward to talking to you more. Thank you.